So we have, in 9-1, we have Chris and Elaine Robbins, okay? Filed a 1040 last year. Oops, I'm sorry, I went back too far. 9-1. Elmer and Elizabeth Jones. They filed a 1048 last year. They would like to file a joint return for 16. Elmer and Elizabeth get a refund. They would like it deposited. Pretty much everything pretty straightforward on that. Okay. So we have, all right. All right, so we'll get some of the information there that I need. I won't do everything on the main info so we can get to the, whoops, the part that I'm sure you're going to go, oh, okay. Okay, we got Elizabeth. All right. Okay. And I'm going to get their birth dates in there because that's the important part. Okay. Right now, I just entered Elizabeth's birthday. Why does that birthday probably strike me to be significant? How old is Elizabeth?
59.
So what happened to her being born in February in the tax year 2016? She turned what?
59.
And a half. On August 15th, she would be 59 and a half. So she cannot exclude on the state her entire pension. She can only exclude 4 months because she had reached her 59 and a half birthday. All right. Even though it's coded that she could take it in the year that she turned 59 and a half, it's coded 7, or it's coded 1, correct?
She's coded 1, yeah.
But on the state, she can exempt anything that is after she turns 59 and a half. Okay. So if I take and I go to her, let me put her pension in here and I'll show you what you do. Okay. Because she's the, Elizabeth has, let's see, hers is from the Hartar company. Hartar. Okay. So on her pension, if we go into our line, we put our 1099-R in, so we have to make sure we code it what? Spouse. Remember how I stressed that, okay? So we have to put that in there. We have her code. All right, and we have, she had $10,000, correct? No. Okay. We have $1,000 withheld. What's our code? So that means she took it out before she turned 59 and a half, probably just a one-time distribution, not an annual month or monthly distribution throughout the year. Okay. But can I check the box of 59 and a half? She was 59 and a half in the year.
Is that box 1?
Yep.
It should be unchecked.
Well, I'm going to check it. Okay. All right. So if I do that and I go to the New York page 2, what's it show me? That all 10,000 is excluded. But can I exclude that? No. First 8 months of the year, she was not 59 and a half. Okay. So what do I have to do down here? I do F5. I take the 10,000, divided by 12, and then times it by 8, right? So what do I have to exclude?
You're talking on line 9.
On line 29 of the New York 201, page 2.
Okay, I see the pension.
But at the bottom it says, if the spouse reached 59.5 during the year, enter any adjustment needed on line 29 for pension received prior to turning 59.5. So she gets 4 months of exclusion. She can't take all 10,000.
Now, pension and annuity income in New York, it has 25, which is both of them. But if we're going to.
You're going to back out $6,667 of hers.
Of her on this.
Why? Because she had not turned 59.5 until April 15th.
So that's just the 8 months.
You backed out the first 8 months, yes.
You said 16.
Well, if you take the 10,000 divided by 12, so if you hit function F5 or F5 to get your calculator, and so you're in that box, okay? And take 10,000 divided by 12, and how many months was she not 59.5? 8, right? The little slash thing over on your 10 key on the right. Do you have a 10 key?
No, but I have a,
Yeah, you have 10 key. That's the one.
okay.
So if you get function F5 in there. Oops, you gotta get out of the box. Back into this one. Out of function F5. Hold on your function.
No, but it came up when I was out of the box.
Oh.
Let me try that.
Is each month 12,893?
Yes. You take 8 times 833. So everybody see what I did on there? Does that change the answer at all on the state? I don't know that the answer key did that. So the federal is taxable and she has the penalty. So that's where you got the right number on the federal, but on the state, you have to back out the months prior to her turning 59.5.
Stupid question, but what if she waited until she was 59.5?
Then it would be coded different.
Nothing on here that says it.
Well, then it'd be coded different.
The one wouldn't be a one.
If she waited till November and took the $10,000, because this is where somebody called me, if she waited till November and took the 10,000, it probably would be coded 7. Does that make sense? Yes.
My state refund was correct until we just did that. Now I have $729 state refund.
That's what I have.
Yeah.
That's when I
The answer
did
key's
that.
wrong because I picked up on that because I did a PDF of the problem. I'm like, they just gave her all 10,000. So it was off on that one. All right.
Okay, so the answer should be,
If you take and adjust that by the 6667, it should be the 729.
the 729, okay, because I had 820 and now it's 729.
Okay. And that's where, like I said, when you're entering that return, in that time you frame that you do that, that you have to make sure that you realize what their age is. So, okay?
No, but
That's what she's at.
Do you have,
You do see it too, because in teachers, 55, 56,
but if they have a state pension, it's going to be tax-free in New York no matter what their age. So, yeah, it's exempt. So they always have the exemption. All right.
You have to really catch that.
That's why I say the software used to calculate it, I think 3 years ago, and then it stopped. I don't know why. I don't know why they won't put it back in, but you have to watch it. Because we get a ton of letters, like this summer, we got a ton of letters about people's 59.5 on the state, New York State. So where preparers weren't watching and being careful. All right.
And the state loses, not the preparer.
No,
I mean, the
most,
preparer loses,
the client loses because they got to pay tax and more income.
right?
'Cause, you just think
And
they're
the
59 and a half, check it, but you got to make sure when. Because what happens if I have somebody that's born in November? It says 59, but they're born in
Pay over
November.
11 months of tax on it.
They're not 59 and a half until the next tax year.
Oh, because it has to be by August.
Yeah. Well, no, it doesn't have to be by August, but your birthday has to be early in the year for you to turn 59 and a half. If my birth date
Oh, I
is
see what you're
November,
saying, not just 59.
yep,
I'm sorry.
59 and a half. My birthday is my 59 and a half. So even though I turned 59 in that year, I might not get any exemption because,
The half has to hit.
yes,
You have to
my
have
half
six-
won't hit
you
till the
have to
next.
be 59 for 6 months.
Yeah, exactly. So, all right.
So you
Okay.
actually have to turn 59 by June. Yeah, mine's right. Check your numbers, you can check your numbers.
Okay. Do we figure out, Mark, where yours was?
Kim has the same thing as Mark, too.
Next to 21, but after that's still.
So how much on the state?
State leaves 120.
No, page 2 of your number.
So it's on the state, you got your federal to agree?
I had that.
So go to your New York, page 2.
Yeah.
Scroll down a little farther. Oh, we forgot to check the box. Go check the box for the other 1099. Go to my pension, 1099R, go on your tree. Oops, go to your first one.
You have the same,
Then scroll down. Got to check, he was 59 and a half. You see. Yeah, he was over. So,
Oh, if it was over 60 and you
Okay,
didn't check.
all right.
If they're over 50.
After I entered that social security statement on my federal. I didn't know, I thought it was a trick.
No, it wasn't a
You
trick.
did it on
So,
hers, and you did
All
it on
right.
hers, but you have to do it on his, since he's 65.
okay.
You do it on his, that's his 1099. Yeah, that's the husband. Right, right.
Okay.
He's 65, so.
All right, so let's take a couple minutes. Everybody get situated and get the books ready, okay? And then we'll get into itemized, all right? Okay, any other questions on the problems? Like I said, these are going to be most common to everybody, so we're on chapter 10. And we're actually done with one book. Does mean we're about halfway through, huh? All right. So we're doing itemized deductions part 1. You can see there on page 10.3. Remember the one chapter we talked about. We're doing deductions. Okay, so we've calculated our gross income. We're now going to start to lower that income before we calculate the tax. Once we calculate the tax, what's going to eat the tax up? Non-refundable, the Pac-Mans? Or the refundable, the bunnies? Okay, all right. So we're in that phase right now where we're doing deductions. We're trying to lower our income before we calculate tax. All right. The deduction can be in 2 forms, standard or itemized. All right. So we have one of the 2. All right. Now, obviously the easy way is to take the standard deduction, and some people just choose to do that. Okay. Or some people will choose to itemize. So what we're going to talk about is we're going to determine the standard deduction, including any increase or decrease, okay? Or I should say any increase, I'm sorry. Determine when it is advantageous for a taxpayer to itemize. We're going to talk about deductible medical and dental expenses, tax and interest expenses, and charitable expenses. Again, these are things that most of you know. I itemize my deductions. I bring in my mortgage. I bring in my property tax, my charitable, okay? I might bring in my medical if I have a big medical event, all right? On 10.4, we have standard deduction. We've talked about this already. Does anybody remember when? the standard deduction? How do we determine filing threshold for somebody?
Filing threshold,
If somebody has to file a tax return, what are those two numbers that we added together?
the standard deduction and exemption.
Exactly. Okay, all right. So we've kind of talked about this a little bit, the standard deduction, because we see single or married filing separate, 6,300. Married filing joint or qualifying widower, 12,600. And head of household, 9,300. With the head of household, you can see how when we talked about the earned income credit, they kind of work together, don't they? Having that head of household with that qualifying child and the earned income credit really keeps you from paying taxes, okay? Now, what happens if how do we increase our standard deduction? Well, if you look down at the bottom, table 20-2, what happens? Based on the birth date that we put in there, okay? All right, so we have that.
Why do you get more of a standard deduction over 60?
Probably because they feel like you should. Because what happens with somebody that's 65?
They're not working.
They're not working, so part of it's going to be state tax paid, and they don't pay a lot of state taxes because they don't work, so there's nothing taken out of their paycheck. What typically happens with somebody that age when they're with their house? It's paid for. What about their property taxes in New York? They get the advanced star or the star reduction because they don't have kids in school. So they don't have a lot of things to itemize. So they give them a little extra. So, okay. So they're saying thank you for surviving that long, I guess. So another way just
You
to,
made it.
yep, you made it. Here's what you get, okay? No more gold watch, you just get extra money on your taxes. All right, so we have all those. You can see how they increase based on the circumstances or the age or blank. When do we determine that when we're doing a tax return? Think about all things on the main info sheet. You can put in there their age, and then there in the main info sheet too, what is there? There's that box that we could check if they're blind or disabled. So we can determine their standard deduction or their threshold to get to by what we do on the main info. All right. It fills it in for you, but it does circle it and show you up on the top of 10.5. It shows those two, lines that would be if they were 65, things like that, so that they can get that extra standard deduction. All right. Itemized deductions. So we're on page 10.6. When somebody wants to lower their AGI, they're going to use their itemized deductions. Okay? When to itemize? In general, the taxpayers must itemize when they don't qualify for the standard. What's the prime example of that? Who doesn't get to itemize most often? Well, there's two people I can think of. Who's going to lose out on something every time they do it? Married what? Married filing separate. Who else tends to lose out on a portion of their standard deduction? Dependent. If you have somebody that's on your return as a dependent, yeah, based on their income, they may not get the full 6,300. Okay. The other thing in general, itemized deductions result in a larger deduction than the standard, and it's made out of out-of-pocket medical, state and local taxes, mortgage interest, gifts to qualifying charities, and we won't talk about the uninsured casualty theft or loss yet. Okay. All right, because that's in chapter 11, right? Yeah. Okay. Yeah. All right. Now, first part, here's what we're going to do. We're going to work right down. So if you want to open up a return, it's not one that you've done or one that you have played with, and we're going to go to our Schedule A, okay? Because basically what we're going to do over the next two chapters, we're going to work right down the Schedule A. All right?
You said just open one with already played with.
Yeah, just one you don't mind messing with, okay? I don't want you to have a return that you're going to go, oh, now how do I get it back? Okay. So we're going to start with medical and dental, right at the top of the Schedule A. Okay. So I'll go right in there to return, open that Schedule A. All right. Medical and dental. What you get, this is one that has what I call has a threshold. Okay. As it says there, if you're under 65, you have to exceed 10% of your gross income before anything counts. So if I make $100,000, I have to have $10,000 so that I can itemize my medical. If I have $10,001, how much is my medical deduction? $1. Okay? And unless you have a major medical event or some of the other things that we'll talk about, tough one to get over. Okay? Even if you have a high deductible plan. If you are over 65, it's 7.5. But 17 is the last year for that because that changed under the Affordable Care Act. So everybody's going to be 10% now. Okay? Now, when you're doing medical expenses, I want you to think outside the box. It's not just, I cut my finger and went to the doctor. I had my tooth pulled. I got glasses. Okay? All right? A lot of different things can be deducted with medical. So, what we're going to do is I'm going to show you how we do that to kind of track it. We'll talk about each one of the different ones. So what I want you to do is go up on that first line 1, light up the box, hit F9, and there should be a little thing in there that says what? Itemized Deduction Detail Worksheet. So open that up for me, okay? Everybody have what they see up there? So what's it say? Medical expenses, prescriptions, legally obtained drugs, okay? I suppose in some states they have to rewrite that now if you live in Colorado. Or I guess New York too, right? Marijuana, medicinal marijuana, isn't it legal in New York now? I don't know. I don't.
Some cases, I think.
Yeah, I wouldn't even be able to tell you what they call them, dispensaries are. I wouldn't even begin to know. Okay, so it talks about all the different things on there. It talks about health savings accounts. Okay, basically what we have, your medical miles. We can deduct medical miles. If I have somebody that lives in Lewiston and is going through cancer treatment at Roswell and has to go 3 days a week, it's a lot of driving. They can take 19 cents a mile for that, okay? Health insurance premiums paid. And why do you think it says not pre-tax in parentheses? So if they're taking it out of your paycheck on your W-2, you don't get to deduct that, okay? And then it says health, dental, cancer. So basically any insurance that you pay out of pocket, that premium you can deduct. So again, it's just not, I cut my finger and got stitches and I paid for it, okay? Qualified long-term care contracts, all right? These are things that you can deduct. How many in here have a long-term care contract? They're a fortune anymore, the premiums. And you can see why that, there's on the middle page 10.9, they have that limitation on it. Okay.
Go back a step.
Yeah.
Town pays health insurance, but the union, for example, they pay 10% of their health insurance.
Mhm.
That's deductible.
Yep. No, the union pays it?
The town pays for basic health insurance, but we pull 10% of that value out of the employee's pay to help us pay for it. So the employee's paying 10% of your health insurance.
But is that 10% pulled out? Is that in the taxable income?
It doesn't enter anywhere on the W-2.
What I'm saying is their box 1 lowered by that 10% that you're pulling out? I would guess yes.
Oh, yeah, that they're not paying.
Because if they're paying it with money that's taxed in box 1 of their W-2, then yes, they could deduct it. But if that box 1 is a number that is netted down, because it might not be where you think it is on, sometimes you'll see it in that box 14, where, like I said, it's just a description stuff. And a lot of times they call it Cafe 125, cafeteria plans. Yeah. So a lot of times that's telling you that box 1 has been reduced by that amount. And really the only way you can really determine it, because there's not enough on the W-2, is look at a pay stub and see what their gross pay is and see what it's reduced by. So like their year-end pay stub would have a year-to-date. Okay. We have qualified long-term care. Again, very expensive. The middle page of 10.9 shows each one of those limitations. This morning's example, I did one. Somebody paid, and it's not uncommon for long-term care for a year to be $25,000. But because my client here is only 42 years old, he can only deduct $730. There's a limitation. They put a limitation on it just because these contracts were getting out of hand. Everybody know what a long-term care contract is? Basically, an insurance premium to cover you should you end up in a nursing home. And when they figure almost half of the population will because of the aging. Okay. All right. So we have that. Medicare. Remember when we were doing on our SSA 1099s, we were putting Medicare in there in that worksheet. Automatically carries over for us because they're taking it out of our pay. Okay. Because we're putting in the amount before that's subtracted for their Social Security tax bill. Okay. All right. Now, here's the fun part. Okay. Down at the bottom, bunch of little blank spots. This is where we can put in varying medical expenses. And if you go to page 1010, all right, you will see all of those listed of things you can include and can't include. Now, great little table, kind of talks about all things, but I'm going to give you some examples of some things, all right? Anybody in here suffering from an anxiety disorder? Anybody want to admit it? Yeah, you weren't until you took the class. Gee, thanks, Bob. I appreciate that. Well, now, Bob, because you have an anxiety disorder, if you choose to have one of those little dogs that you carry around with you to comfort yourself, and you have to take that everywhere so you can go out in public and you could go grocery shopping at Wegmans, that dog becomes a medical deduction. It's food, veterinary, and maintenance.
No way.
Because a doctor has described that for your ag. Yes. A doctor has told you have anxiety disorder. Yeah. Oh, yeah. That's a medical deduction. Okay. I give this one because I give this example every year, and everybody looks at me like I'm nuts. Second year I was working for Esther. I ended up with a client. The client came in, sat down. The client gave me their social security number. I typed it in. On my screen in front of me, it says Brian. Sitting across from me is not Brian. Okay? Obviously not Brian. All right? So I'd ask, I'm sorry, are you sure that's the correct social security number? Yes, here's my license. License said Brian, but obviously there was not a Brian sitting across from me. Okay? All right? There was a Brianna. So the time from the previous tax return to this one, that individual had gone through a gender transition. Okay? Now, being a new preparer, I'm thinking, okay, whatever. Brianna had her medical expenses. I'm going, okay, well, talks about, well, yeah, I'm not sure. Did a little homework. For that gender identity, a lot of it was out of pocket because Brian did not work much, so his income was down. Because Brian left town for 6 months, went to Pennsylvania to come back, Brianna. So that time that they were, they were gone, okay? Low income, itemized. I was able to itemize the medical. However, because it was something that was done because they had a gender identity disorder that had been diagnosed by a psychologist. So I did my little digging inside the IRS. I need proof. I got a 6-page letter from a psychologist explaining why Brian is now Brianna. Didn't need to know all the details. I just needed a little paragraph, but they gave me 6 pages, okay? So what I did with the client, and we'll talk about this too when we get into more interviewing, I said, I got to do some homework on this because I want to make sure we get everything. So I did all my homework. She came back in. I had to inform her, besides the fact that she needed to change her voicemail because it was still Brian's voicemail on her voicemail. So that was confusing, but that's a whole other subject. Did the research, all of that because of gender identity, but I had to say to her, I need to break it down because anything that she had done that was not necessary for her to identify female could not be deducted, okay? So certain parts of her anatomy that had been, we'll say, augmented were not deductible because they were cosmetic elective. So I had to back all those out. So anything that was done so that she could identify, I could deduct on the medical. So like I said, with medical expenses, sometimes thinking outside the box, okay? Because, you'd start looking at all these and you're going, well, where's that fall into? What category does that? Well, if you look on there, it says on there that cosmetic surgery is not because it's elective. Well, in that situation, there was cosmetic surgery done, but it was not because they elected to do it, but they had to do it because of their gender identity disorder. Okay? Got everybody confused? So, all right. So when you have those clients that come in 1 year one way and another year the other way, then you know what to handle, how to handle. Okay? But like what I want to prove to you is, what? Call Tim, yeah, call Tim. And you want to know the kicker for this one, Angela? They work for the railroad.
No way.
No, I'm just kidding.
I was fixing to say that's really bad.
Yeah, that's really bad. You'd send them away, right? So this is a great chart, but like I said, there's things in here, like we're talking about the dog. Anybody that's physically disabled includes costs such as food, grooming, and veterinary care incurred to maintain the animal's health and vitality to perform their duties. So yes, if Bob has anxiety after taking this class, he has his little dog, comes in here and sits by him in class every time, guess what? If he bought one of those donuts, he could write it off. All right, or if he takes a dog to get groomed so it looks nice so that he feels comfortable taking out in public, it's deductible. It's a medical, okay? Believe it or not, it does say in here dancing lessons are non-deductible, even if your doctor tells you to do it, okay? So there are some things that you would think that, have to do with different things. Wigs, if you got to get a wig, because it says here, purchased on a physician's advice for the mental health of the patient due to hair loss. Okay, so if somebody needs to get hair replacement because of a identity disorder, okay, as if we're not a prescribed enough society already. All right, so again, we talk about these. Now, it goes on. Thinking outside the box, it talks about capital expenses for medical. All right. I have a client that she follows me everywhere now because first time she came into me, I got to talking to her and I go, oh, your husband has MS, really? She goes, oh yeah, I mean, it was such a thing. I had to basically build a wing on the house to house him because our house was not able to accommodate his needs. And I said, really? Did you deduct that? She goes, no. It was a capital improvement to our house. No, it wasn't. She had to put a ramp in, special bathtub, special bathroom. The hallways were wider. She had the little track to be able to move him around the house. All medical deductions. You can see all the things that they list there about all the different things that talk about, and again, thinking outside the box on the medical. But has to be pretty high. What's the other one that can be in there that sometimes people forget? Nursing home. Okay? I'm going to read to you what it says in here. Entire costs for medical care, including meals and lodging, if the main reason for being in the home is to obtain medical care. So if somebody's in a nursing home for medical care, you can deduct all of it. Now, if it's just someplace for them to live and they're not there for medical care, but maybe portions of it are, maybe they have once a week like a rehabilitation thing for something they had or something like that, then we can do that. But if somebody's in a nursing home for medical care because of a condition, that whole month or that all amount can be written off. And how much a day can it cost to be in some of those places? Be a really nice hotel for what they pay per day. Okay? All right? If not entering the home primarily to obtain medical care, only the portion of the fee actually spent on medical treatment is deductible. Okay? So that's why I say, think outside the box. All right? As a little side note, remember me talking about the bed tax for the seniors? For the nursing home credit? That credit that's on there? Anybody remember that one? Okay. Remind me when we get into the second here, okay? So the other thing too is travel. What happens if I'm referred to the Cleveland Clinic and I have to go down and stay in a hotel? Because I have to get treatment there because that's the only place I could get it. Nobody in Buffalo could treat me. Can I write off my travel and medical? Or my travel and lodging, meals? Yeah. Yep. Okay. All right. Diaper service for you parents. Non-deductible unless needed to relieve effects of a particular disease. I don't know what that means. Okay. All right. Okay. But yeah, if you ever get a chance, go through here and start, because I just started reading these one time, and that's where like, wow, okay, all right, great, okay. All right. Right off your television if you have to have it because you can't hear. Okay. All right. So we talked about the capital expenditures. Now, the nursing home credit, okay? Little known credit on the New York. It's what's called a bed tax. How many have ever looked at their statement when they've stayed at a hotel and at the bottom they have all these taxes? You spend one night, you pay $30 in local taxes. Thank you for visiting, okay? For certain facilities in New York, they pay what's called a New York State assessment tax. And it's a percentage, I think it's 6% of the bill. So for some of these places, several thousands of dollars a year. All right? You can get that as a refundable credit in New York. I've had clients where all I do is file a New York for them because they have a spouse that is in a nursing home where this credit exists. And every year it's $6,800 that I get back for them. So, I mean, like I said, it's a very sizable credit, and it's the dumbest form in the world. It's a little teeny form. You write the patients, or the taxpayer's name that's in the facility, their address, social security number, the address of the facility, and the amount that they pay. Every time New York State says, we need support, and I want to write back to them, then put it on the form, because the form just has one little spot. And every time the client gets a letter, and I tell them, hey, I'm going to make copies of this because I know darn well you're going to call me in about 4 weeks and ask for me to respond to this letter. All right? So that's one that's on there. It is IT. It is a refundable credit. New York 258. So if you want to write that down by your medical expenses, make a note of New York 258. All right? And like I said, this is it. This is the whole ball of wax on the form. But it's a gold mine. All right? And if you need to, all the nursing homes know about this, but they might not necessarily tell you about it. But if you ask for an itemized statement of each month, they'll show this tax as a New York assessment tax, okay? Like I said, the facility, their address, who stayed there, 6% base rate, and it can be several thousands of dollars. Again, you do one of these for a client, you tell them, oh, you got a refund on the state of $5,300. What? Yeah, you get part of that money that you paid for the nursing home. All right. Okay. And while we're here, I want you to go to your New York NY IT 201 page 3. So go to your IT 201 page 3 on your computer, okay? That long-term care contract that we talked about, that long-term care insurance, that is a non-refundable credit in New York, okay? So if you see right here, what's it show? $139. That's a carryover from that $25,000. Non-refundable or what type of credits? Backman. Okay? So in New York, if you have long-term care insurance and you pay the premium, whatever you pay on that premium can eat up your tax bill. Which, again, nobody has long-term care insurance in here. I think the premiums are several $1,000s a month now. They're out of control. But when you see what it costs to stay in a nursing home, it makes sense. All right. So that one can be away, and that's why a lot of times seniors don't pay taxes. Okay. All right. Now, let's go back to our little worksheet where we were doing the A detail. So if you go to your Schedule A, right underneath it's that little A detail. That's that little sheet that we were working on here. Everybody see it? In those boxes, most of my clients, so that I can have them in and out in a timely manner, they know the categories. I tell them I want prescriptions, I want co-pays, I want vision, and I want dental. And I'll usually put those as headers. So I might put here prescriptions, dental, vision, whatever it is. Sometimes, and then if there's a nursing home, I'll put nursing home. Or if there's hernia surgery, I'll put hernia surgery if it's a big ticket. So that I have kind of a general category. I'm not going to type in every aspirin. Okay? I don't need to type in every prescription. And the other thing I always tell them to do, go to their pharmacy, get what they paid, and what a lot of the insurance companies, especially Medicare, do. They give you those little things that tell you how much you paid out of pocket throughout the year. All right? So that's the medical side, okay? All right. Any questions on medical? I can't wait for my phone to ring this year with Angela calling. You know what? I had a Brian Brianna come in. So, and I knew what to do.
Your address?
I knew what to do, okay? I knew exactly how to handle it. All right. Okay. So let's go to 1021. We're going to talk about taxes you paid. And again, we're on the itemized deductions. We're on a Schedule A. So we're going to talk about taxes you paid. Okay. 2 tests must be met to deduct any tax. The tax must be imposed on the taxpayer taking the deduction. All right. And the tax must actually be paid during the tax year. All right, so in 1020, basically what we're saying is, if you're behind on your property taxes, do you get to take that property tax? No. But you're behind 3 years and all of a sudden you're able to get caught up and pay them all in 1 year. Probably on itemized deductions, aren't you? Okay, cash basis. All right. Taxes deductible are 5 general categories. Income tax, what that one is, on your W-2, the state tax withheld. That's the biggest part. Sales tax, I don't know why we're talking about it. It's gone. Okay, 16 was the last year. All right, okay. Real estate taxes, this is the one that hurts with the new tax bill for everybody in New York. Okay. Because anybody that has high property taxes, the new tax bill is going to really hurt you because you're not going to get to itemize. Okay?
Wait, you don't get to write off your
Nope.
property taxes?
Nope.
I don't pay any, but that stinks.
Personal property taxes and other taxes. Okay?
But you used to? Yeah.
Oh, yeah. Yeah. And for New York, that was a great thing because we got such high property taxes. Because they're giving you this wonderful doubled standard deduction.
It's only if it
It did, wait, did it pass yet?
No.
Okay, I was fixing to say, wait a minute.
So.
Now, do you think they're raising the standard deduction since they're taking away the exemptions of all these parents with children?
Sure.
Or do you think they're gonna raise it?
I don't know. But I'm sure I'm going to be watching for you on the news picketing down in front of Washington, aren't you? With all 5 kids in tow. Or 4 or 5?
Or
4, okay. All right. Okay. Taxes paid. Like I said, the first part, income tax. As it says on the bottom of 1021, it's all that stuff that is from forms W-2, 1099-Bs, all those state tax withholdings. Okay? Also, your estimated taxes. We're going to talk about estimated taxes soon. The big thing with the state estimated taxes is the last payment's not really due till the middle of January. But if you get it in before the end of the year, it helps you on your itemized because it's in the year that you paid it. Okay. All right. Sales tax, I'm not going to worry about talking about because, like I said, it just doesn't come into play. All right. Okay. The other tax that you can deduct, anybody ever seen that NYSDI on their paycheck for $31.20?
Yeah, but I saw it in the news.
Okay. Yeah, New York State Disability Insurance, that's actually a tax. So you can deduct that. Okay. If I have a second residence down in Ellicottville, can I deduct the property tax there?
Yes.
Yeah. Okay. Can I deduct the tax on my mobile home?
Yes.
Okay. What about my RV?
The taxes on your RV, no, that's a,
What about the mortgage interest on my RV? Yes. If I can prove that I could live in it.
Right.
And I, trust me, the IRS, I've had clients where I've sent them out, go take pictures. They have to take a picture of the bathroom, the kitchen, the bedroom, that they can live in. So you can write off the mortgage interest. It's a little pull behind that pops up. But if it has all the amenities that it could be of a house, then yes, on an RV.
You don't usually need mortgage.
No. Nope. Okay. Okay, so we have our property taxes and real estate taxes. Don't worry about the table on all the little teeny print on 1026. Okay. That one doesn't come into play because you're not going to do it. All right. Okay. Real estate taxes, 1027. I can write off my property taxes. What else can I write off? Okay, so let's go back to Schedule A. And we're going to look at taxes paid. Okay. State and local taxes. In this case, I said my general sales tax was bigger. Reason being is, if somebody's retired, it used to be beneficial to them because they could take a sales tax. Because if you're retired, what do you not have withholding from? No state. Because you don't have any tax liability in the state. Okay. Anybody, we kind of mentioned a little bit, anybody remember what the 8829 is? That's the home office. We'll talk about it when we get to Schedule C. So basically what's saying, if I have a home office or I live in a duplex, my taxes paid, my real estate taxes, all right, I can take and split those. Part of it goes towards my home office, and part goes towards my rental, and the other part is personal. Can I take the full amount in both spots?
No.
No. Okay? And trust me, one of you guys will be the Double Dipper of the Year award, okay? because when we start doing rentals, you'll put them in both spots, because somebody owns a double, oh, property tax, oh, property tax. Well, you gotta make sure you split it, okay? Case of a home office, I can only take what's left over from my home office. So if my home office is 10% of my house, the other 90% can be on my Schedule A. 10% stays with my home office and my self-employment, okay? Principal residence, we talked about personal property from other ones not listed above, like the property in Ellicottville, and then the New York State disability. There's my little $31. Okay? All right. Now, interest paid. Kind of almost mirrors what we just did. All right. Oh, one thing on taxes. Make sure that if you have somebody that bought or sold a house, this is where I think I talked the other day about the HUD-1 and the closing statement. Make sure you get that, okay? Because what's that HUD-1 and that closing statement show? They might have paid what during the closing? Points or property tax, okay? Because sometimes, depending on how the school and how the purchase of the house falls with the property and the school taxes, may be able to make the difference there, okay? Interest, kind of mirrors. What form shows up again? 8829, my home office, okay? So anything that's left over there, all right? What else shows up? My rental. I can only, if I have a mortgage on my duplex, and I live in half, okay? I can only take the other half. What else do we get to do? Somebody mentioned points, okay? I have points. And where do the most of these show up on? That little 1098, okay? All right, that mortgage statement. And if it's from Wells Fargo, please go check it. I mean, it never fails. What about this one? It has somebody's name. Does anybody remember what we talked about the top of the Schedule B? What was at the top of the Schedule B? There was an address thing, wasn't there? So if I sold a house to Bob, and Bob's not able to get a mortgage, okay? Due to his lack of working from his anxiety disorder, okay? He doesn't have the money to get a mortgage. But I said, Bob, what's that? Yeah, he only had money to feed his dog, okay? I said to Bob, I'll hold the mortgage. You don't have to go through a mortgage company or a bank. I'll just hold the mortgage and you'll pay me. Okay? So Bob's making mortgage payments to me. Well, as a payee of mortgage interest, what should he be able to do? Write off. What do I have to do on the Schedule B? Interest income. So that's why it shows up listed like this. Looks just like the top of the Schedule B where you'd have to show that you have them. Okay, mortgage PMI, a lot of times that shows up on the 1098, that's there too. All right. All right, any questions on the interest? Interest and property tax, they just kind of mirror each other. And it's a lot of lines, and like some of these other ones will come into play, but right now you just need to know that 1098 that you're gonna get, that's where it's gonna come from, okay? All right. We're not going to worry about investment interest, okay? Because you're not going to see that. Gifts to charity on page 1036, okay? It's our next section. Gifts to charity here, gifts by cash, other than cash, or carryover from the prior year, all right? Let's go back to our little sheet. So if we go back to our little A detail sheet, and we get there, we scroll a little bit down. Okay, so on the computer here, you're on your A detail sheet. All right, what do we see? Cash contributions. We can list our charities. What else is there? Miles, okay? Let me ask you this. cash contributions, okay? I'm coaching outside of school. I'm coaching my son's soccer team. Strictly a volunteer as a coach. All right, can I write off the miles?
Yes.
It's a charitable organization.
Yeah, it's a 501c.
Oh, it's charitable.
Can I write it off?
Can you write off the mouth? Yes.
No,
Why?
because my son's on the team. I'm going to be at those games anyway.
Mm.
Now, if I'm a Boy Scout leader and none of my kids are participating in Boy Scouts, what about that? Yes. See the difference? Because if those soccer games, I'm probably going to be there anyway. So am I really volunteering? But since I can't do the miles, I can probably, I usually work 9 to 9. Last 2 hours of my day, I'm taking time off to go do this. And I usually get paid $100 an hour, so I can deduct $200 every time I'm coaching soccer. Mark's going, not a chance. So,
I was just fixing to say, are you trying to be for real?
no, because I can't put a value on my time. Okay? So that's not charitable. What it boils down to is charity is what? You don't expect anything in return. All right? What about the firemen are doing a raffle for a side of beef? Can I write off the raffle tickets? No. Why? I have a reasonable expectation, even though I may not win or I've never won, but I have a reasonable expectation of getting what? Something in return. Okay? Might be just a hamburger because I don't get the whole side of beef, but I have a reasonable expectation. All right? In the problem and the exercises we're going to talk about here in a second, but those are charitable things. The big thing to remember is that did I get something in return? And is it a charitable organization, the 501c? Okay? Cash contributions, keep track. Okay? What about every time you go through the checkout at Tops, they want you to put one of those little red tennis shoes up on the wall. Can I write that off? Yeah, it's for a charitable thing. I don't expect anything in return. All right? But it's cash. I need record. Okay? All right? What about Chinese auction? I donate a basket to a Chinese auction.
No, you did get something in return. You have a chance of getting something.
Why? I'm not participating.
What's a Chinese auction?
Where the baskets? Where you get a basket and then you walk around and put little tickets in the bags?
Oh, yeah, you might win something.
But I didn't buy any tickets. I didn't participate.
Oh, you donated it.
Yes.
Oh, I thought you were in it.
No,
Sorry.
no, I didn't buy tickets. I just donated it.
Yes.
Would
Yeah.
it make a difference as to who the organization is?
Yes, you still got to be where it makes sure that you're doing it. What about you gave money on a GoFundMe page? They started one for Office Lender's dog, to support. What about your contributions to that?
If they can give you
Oh,
No.
a receipt for it.
Mark's having second thoughts back
They
there.
have to have a chair.
It's not a charitable.
Yeah, is it a charitable organization?
In that case, I could
You
write
know?
off giving money to my brother for his wife to have a baby.
Yeah.
Because that was kind of me.
Well, but if you want to go back a few steps,
if it's done to the city, make a payment to the city.
exactly. If it's in the name, it depends whose name it's in.
EVA.
Yeah, exactly. Exactly. So, you have to really do your due diligence. Just because I gave money to something as a gift or a charity or whatever, doesn't mean it's necessarily deductible. Okay? All right. Non-cash. All right. This one's even more fun. Okay? All right. Best example I use is mom and or dad passed away or they moved out of their house and we got to empty it. Okay? And they've lived there 55 years and have never thrown anything away. Okay? All right? I can get Time Magazine at an app. I don't need all 450 years of issues. Okay? But someday they'll be worth something. Okay? Most of the time with non-cash, what are we bringing into play? Fair market value, okay? That Time magazine from 1965, or what was it, 67. When did they walk on the moon?
69.
69, okay. 69 is worth $5,000. I gave it to the Goodwill. Well, is that fair market value? Goodwill has it on its shelves. What's Goodwill probably going to say? $1.25, maybe $1. Okay, they're not worried about the collector's value. Okay, if you look on page 1045, all right, it talks about all the values. All right, the one I use most common is t-shirts. A men's t-shirt or ladies' t-shirt will get you between $1 and $6 for charitable contributions. $1, somebody's buying it to wax their car. $6 you're probably going to see in that thrift store. Okay? So just because they got rid of 50 pairs of jeans doesn't mean that they're all, you know, top of the line. Right? Okay? If you go down on your worksheet, you see other than cash contributions, if it's over $500, we have to use the form 8283. All right? That 8283 is saying, I need to give some more detail. Or, what's the other time we might use that? What do we give? We playing charades? Yeah, vehicle. Okay. All right. Okay. All right. So if I go in where it says 8283 and I bring that up, you can see I have a little form there that I need to give more detail. So the government's basically saying, okay, you cleaned up mom and dad's house, you gave their car away, okay, whatever else, you need to do some more things. So I got to say I gave it to Goodwill. Or if this says and vets, what's the middle box say? What's column B say? Enter the VIN number. Why would that be the case? Somebody's tracking it, aren't they? And I'm probably going to get, and you always get a 1098-C from that charitable organization, all right? After our kids have driven our cars to death, we always give them to the veterans anyway, okay? The description, usually what you can put in here, I always just type household items and clothing, unless it's a specific item that I know. So if it's a bunch of stuff you gave to Goodwill, that pretty much covers it all, doesn't it? Okay? If you look on that sheet, go back to page 1040. Oops. 1046. What's that? If you go down to your A detail, and then it's over on this side. See where it says
Oh,
A?
that was you.
Oh, right here. There you go.
Oh, got it.
Okay, all right. If you go to that page, and in there it talks about, under household items, look how much they give for monitors and printers and computers. A couple $100. Why is that? Why do you think all these congressmen have these wonderful little drives to collect computers? There's got to be money in it, right? There is. Okay? I forget how much silver and gold is in a computer. Most of the time, those computers are collected because they harvest the precious metals that are inside them. So that's why you see all these congressmen doing all these environmental things. Okay? Save the environment. Don't throw your computer printer away. Well, what's in there? It isn't, but there's a lot of precious metals in there. So, you know, all right? Not that I'm encouraging you to go home and melt down your cell phone to see what you can get, okay? But that's what you want to put in there, all right? Now, a little farther down on this form, we have to talk and give a little bit more detail about our, what we gave. When did we give it? Don't worry about the date acquired. If you're getting rid of Grandpa's suits, I'm not going to ask you to tell me the date that he bought every one of those suits, okay? I do want to know that they were purchased by the taxpayer, the spouse, or somebody on the return. Donor's cost or basis, same thing. I don't need you to find the receipt for every one of Grandpa's suits, okay? I want to know the fair market value, all right? And I'm going to base it off thrift store pricing, okay? This number here for the donors, what I typically do is there's that 30% exclusion rule that you read about. I usually take the fair market value and just divide it by 0.3 and get that value, okay? That's usually just where I come up with the number. So if you take 500 and divide it by 0.3, what do you get? 1,667. Okay, so that's what they spent on it. Okay. Now, the other thing I want you to notice, go back to your A detail. Contributions to charity. What's it say there? If contributions exceed 20% of the adjusted gross income, list each contribution in the proper category. What that's saying is most of the time I can take my full amount, but if my tax return shows $10,000 of income and I'm giving $7,500 to the church, what's wrong?
What are you living off of?
Yeah, what am I living off of? The IRS is probably going to say, that's where this limitation comes in. All right? Because if it shows that, you know, it's just not lining up. So, plus the other $2,500 feeding the dog. Okay? All right? Okay? So between your $7,500 to the church, Bob, and your $2,500 to feed the dog,
Tax free.
yeah, you don't have any taxes. Okay? All right? Doesn't quite work out that way, does it? So, all right. So that's what we're going to stop at with the itemized. Okay. So we've talked about medical. We've talked about gifts to charity. We've talked about taxes and interest. All right. Any questions? All right. And like I said, a lot of these we're going to circle back to, especially when we talk about the home office and the rental with the real estate and the interest. All right. So here's what we're going to do.